If you've been watching the market and January's numbers felt a little mixed, you're not wrong. January is one of those months where the data can look contradictory unless you slow down and connect a few dots. What that means is this is not a month for conclusions. It's a month for interpretation. January always sits at a transition point. New listings tend to return after the holidays, while closed sales are still reflecting contracts written in December, which is consistently the slowest pending sales month of the year. When those two things overlap, inventory can rise quickly, even if buyer demand has not meaningfully changed. And that's exactly what we saw this year. New listings jumped compared to both December and January of last year. Inventory moved up to just over 4 months. At the same time, closed sales came in lower than a year ago, which lines up closely with December's slower contract activity flowing through the system. On its own, that combination does not signal a shift in direction. It signals a seasonal handoff. In the December market recap, we spent some time on one metric that deserved attention: pending sales. December 2025 pending sales were down about 13% compared to December 2024. The takeaway then was not alarm, but awareness, because pending sales tend to give us an early look at what may be coming next. January helps put that signal into context. Pending sales in January were up both month over month and year over year, increasing by roughly the same 13% compared to January of last year. That rebound does not establish a new trend, but it does matter. It tells us that December's softness did not carry forward into the new year, at least not so far. Inventory was the other headline this month, and that deserves similar discipline. As we discussed in the January inventory update a few weeks ago, inventory often rises at the start of the year because new listings return while closings are still catching up from December. And that pattern repeated again this January, which is consistent with local long-term history. The important distinction here is separating inventory movement from pricing conclusions. Pricing data continues to show alignment with demand. In Clark County, the average sale price in January was around $631,000, and the median price was roughly $549,000. Year over year, both remain higher than last January. Month-to-month movement has been modest, which is typical for this time of year, and the rolling 12-month averages continue to trend modestly higher. Taken together, this points to a market that is adjusting, not correcting. Buyers have more choice than they did during the tightest periods of recent years, and pricing has not detached from demand. January does not give us answers. It gives us direction. The value comes from watching how inventory, pending sales, and pricing move together over the next few months. Full details are in this week's Market Pulse Weekly blog. You'll find a link in the description below. See you next week.